what do you think would be the best benefit? Like, why should I get a cash out instead of a HELOC? Because I get that question a lot from my clients. I know we get them from yours. Yeah. So what do you think would be the best benefit? Like, what have you seen, and kind of how does that work?
Yeah, I mean, that's a great question. We get that question all the time. You know, a client typically will call in asking for a home equity line of credit.
Yeah.
And it's usually one of two reasons. It's either they want to do a home improvement or they want to consolidate some debt. So that's one of the two reasons. So the first thing that we always do is we just ask them, hey, what's the timeline? What are you looking to do with the money? And so once we can understand the goals, then we can help advise them. But a lot of people have this misconception about a home equity line and how it's this great product. But the problem with the home equity line is that the interest rate's variable.
Yeah.
It's an interest-only payment. So you're never paying down the principal. You're not forced to pay down the principal. And the rate will change as the Fed increases the federal funds rate. Now, federal funds rate has been low for very long, but we know for sure and for certain, and they have said it, that they're going to be raising the Fed funds rate. So those rates are going to start going up over time. If you borrowed a bunch of money on a line of credit, you know, that could be a problem.
Increase. Yeah. So then what do you think would be best? Like, let's say, is there maybe certain scenarios where you would refer to HELOC over a refi, or cash out refi usually is better for everyone? Kind of like, what do you think?
Yeah, I mean, I think if you for a home equity line of credit, it's always best is if you're using the money for short-term needs. So some people are, say, remodeling their kitchen and then they get an annual bonus and they're going to pay it off. Yeah. The good thing about a HELOC is that you can charge on it and pay it off. Charge on it, pay off. It's like a big credit card tied to your home. The cash out refi, the great thing about that is you have a low fixed payment over time. You can access up to 80% of the value of the home, so you can pull that money out. And the good thing is in Palm Beach County, we've seen over 20% increase in values. Yeah. So if somebody put 20% down last year, this year, I mean, they could pull, we had one client pull out like $50,000.
Jesus.
Yeah. And he had over $50,000 in credit card and car loan debt. Yeah. So once he consolidated all that, his payments dropped by like $1,700 a month.
Wow. That's a lot of money.
A lot of money.